This week, Peyton and I are going to teach you about head and shoulders patterns. Let's get into it. Key elements. I want to talk about these before we get into the actual imagery. Key elements. Two key elements. You got to have a trend prior. A head and shoulders pattern is a trend reversal pattern. So without a trend prior to it, there's no head and shoulders thesis. Two, you have to have the correct volume. Volume is so key with regard to head and shoulders patterns. A lot of people overlook the volume side of things, but it's very, very key. And the reason I'm telling you these two things is because I've taught head and shoulders patterns for several years now, and people will find head and shoulders patterns just in the middle of like a sideways trend, or they'll find a head and shoulders which is a bearish trend reversal. It's a reversal of an uptrend. They'll spot one in a downtrend, and I always say, look, you have to have an uptrend prior to a head and shoulders, a downtrend prior to an inverse head and shoulders. So, trend prior, the correct trend prior, and correct volume. Let's take a look at the imagery so I can give you a little bit better feel of what I'm talking about. So a head and shoulders pattern, there's two types. Head and shoulders, inverse head and shoulders. Head and shoulders is bearish, it's a reversal of an uptrend. Inverse head and shoulders is bullish, it's a reversal of a downtrend. So as you can see here in my beautiful piece of art, we've got a nice uptrend prior to the creation of the head and shoulders pattern. Then we have the left shoulder, the head, and the right shoulder. This line going across here is called the neckline. Before you want to enter the head and shoulders pattern, you want to see a break of this neckline in order to get a head and shoulders confirmation. Without that break, you're a much lower probability of success with regard to this technical pattern coming to fruition and you having a successful trade on your hand. So, we've got the uptrend, we've got the head and shoulders, we've got the break of the neckline. Key, we need to see these volume patterns. Here's the volume patterns you need. On the creation of the left shoulder, you want the high volume. On the creation of the head, you want slightly lower volume than the creation of the left shoulder. And on the creation of the right shoulder, you want even slightly lower volume than you had in the head. So you want downtrending volume from the creation of the left to head to right shoulder. Then, when you get the break of the neckline, you want a nice spike in volume. Without that spike in volume on the break of the neckline, you're again decreasing your probability of success with regard to this trade pattern coming to fruition. So if you have all these elements intact, you got the nice trend prior, the head and shoulders price pattern intact, and the volume coinciding with what it's supposed to look like, you're going to have a pretty good chance of success with regard to a head and shoulder pattern. So what you would want to do here in this case is short the stock or ETF or whatever the instrument is, futures, after the break of the neckline on strong volume. If we're looking at a longer term chart, I typically like to see 2 consecutive closes below neckline neckline support in this case. So that changes the neckline support to resistance once you get the 2 consecutive closes. And you typically see a retracement back to neckline support turn resistance before it fades. So you can see here we have this retrace back after the breakout. And the retracement, doesn't really matter what the volume looks like on that. So, best case scenario, enter short after the neckline break, 2 consecutive closes if you're looking at a longer term. By long term, I mean, if you're looking at a swing trade, maybe like a 6-month daily chart or something like that. Move over to inverse head and shoulders. A bullish pattern. This is a indication of a reversal of a downtrend. So we've got our key element 1. We've got the trend prior. We've got a downtrend prior to the creation of the price pattern. We've got our left shoulder, head, right shoulder. Alright? Volume. We've got highest volume on the creation of the left shoulder, slightly lower on the creation of the head, even slightly lower on the creation of the right shoulder, creating a downtrending volume pattern from left to head to right shoulder. And then, lastly, most important, the increase in volume on the neckline break. So, in this case, you want to get long the stock, or, buy calls, do some sort of bullish positioning on the instrument after you see the breakout of neckline resistance. So over here, this was neckline support, right? This is a support level, this neckline. Over here, it's neckline resistance. So once you get a break of that neckline resistance now turns to support. So it's resistance turns support. And you typically get a retracement back to neckline resistance turns support before it bounces and takes off. And again, it's just very key to have that strong volume on the break out of the neckline resistance pattern there. So the last thing I want to touch on here is how to measure the measuring implications of these patterns. And we'll do this with regard to a regular Head and Shoulders. It applies inverse to an inverse Head and Shoulders, but it's the same situation, same theory. So you've got your pattern here, and what you do is you say, okay, from the head to the neckline is the height of the pattern. So the peak of the head to the neckline that's directly under that point is your height. So we've got A, B. So AB height, let's say in this case, we've got 100 right there and 90 right here. So the stock price is 100, the peak of the head is 100, and the neckline is 90 at that point. So you've got a 10 height. Your AB height is 10. So AB equals 10. Alright, so once you get the break of the neckline, you can anticipate a downside move of 10 minus that, or 90 minus 10. So in this case, your measured move is going to be 8. So we've got 80 as our target. Pow. Same situation over here, just the opposite. So if this right here was, let's say, 80, and this neckline resistance was 90, then our measured move would be 100. It's that simple. And that's how you place your targets on these trades. As far as stops, you want to get yourself a stop just above, in this case, your neckline support turn resistance. So give it some breathing room above that neckline support turn resistance, and over here, just the opposite, give it some breathing room after the breakout. You want the 2 consecutive days on a longer term chart. If you're day trading it, then you just want a couple ticks. But you want to put your stop just below this neckline resistance turn support level. And that sums it up for Head and Shoulders patterns. If you have any questions, feel free to shoot me an email. I'll be happy to answer them.